I'm Matt Bouchard with REITWeek.com here in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me today is Marty Cicco, Senior Managing Director with Evercore. Marty, thanks so much for joining us again.
Matt, always a pleasure.
So let's start by talking about activist shareholders. Saw a lot of activity last year. Do you think this is a fad, or is there something more fundamental at play here?
We believe it's very fundamental. We think it's going to exist in the market, not just in the REIT space or the real estate related space, but across all the market. And although it has toned down a bit in the real estate space, although there's still clearly a few situations that still remain active, we see across the broader market set actually a pickup or an increase of activity. I would just suggest in the real estate space, to date, it's been primarily focused on advised REIT situations, which present an obvious set of conflicts that are inherent in that structure. So you've seen a fair amount of activity in that space. But by no means do we think it was a fad. We think it will continue, and it's a fact of life in the public markets going forward.
Now, the issuance of REIT preferred shares has slowed to kind of a trickle here. Why do you think that is, and what do you think would it take to get it really going again?
I think the role of preferred within the capital structure of all these companies has its limitations. Obviously, they deal with the rating agencies and do get equity credit, although not full equity credit. I would say overall that although acquisition pace has slowed, that the need for capital for most of the companies has not been all that significant. And if anything, a number of companies are trying to de-lever in this environment. So that's effectively what I think I would attribute it to. As far as how it gets going again, we think there's a demand out there. There's clearly a demand for yield, both in the retail and the institutional market, and to the extent that a use of that capital becomes more obvious, I think you'll see an increase in issuance.
And lastly, where do you see the most potential for M&A in the near term?
That's a question we ask ourselves every morning, of where we spend our time and our focus, because that's how we make our living. I'd make a couple general points. The market has been, the volatility has crept back into the market. It's actually calmed down from where it was a couple of months ago. But first and foremost, M&A is driven by various factors, one of which are clearly financial and valuation. And when we see gaps in multiples or in valuations, activity tends to follow. Activity is also driven by people, management teams, and certain sectors have been more ripe for that, as to the field being crowded, but you have individual management teams that don't necessarily have the motivation to do something. When you get transition in management teams, whether it's retirement or other factors, that makes an obvious opportunity present itself. But I would say that the last comment I would make is a realization that this is a mature industry. The real estate business is a mature industry on a broad basis. And there has been a lot of activity out there. And in the various verticals of the property types, it's not obvious to see that there's large consolidation, because with most portfolios, the good assets come with its own amount of not so good assets, and sometimes making that rationalization is not easy.
Marty, thank you so much for joining us.
Always a pleasure again, Matt. Thanks.
For more from REITweek 2016, be sure to visit REIT.com.